And welcome to Strategic Wealth Strategies podcast with our host, Alan Porter. Alan, what's going on, man? How are you?
Hey, Neil, it's a beautiful day out here in North Carolina. Beautiful Carolina blue skies. Nice and warm. I hope to get in the pool later on today.
Absolutely. Our topic today is, should you take loans from your 401k? Alan, a recent article in the Wall Street Journal says it's time to consider borrowing money from your 401k. These loans have become more and more popular as more Americans get deeper into debt at high interest rates.
Well, Neil, as you learned from many podcasts that we've done together, I have a much better way of getting that money for cash value life insurance.
Alan, what is the interest rate on these types of loans?
Well, the interest rate is usually around 9.5% in many plans. It's mandatory, but it has a mandatory repayment schedule, Neil. And with your cash value life insurance policy loans, you set your loan repayment schedule. You don't even have to pay the loan back if you don't want to. It just comes off the death benefit.
Alan, what are the downsides from borrowing from the 401k?
Well, they can be huge, but understand you can only borrow 50% of your 401k up to a maximum of $50,000. However, you can borrow up to 90% of the cash value in your insurance policy. And in some companies, taking a 401k loan out, I can't believe this. It involves a 13-step approval process just to use your own money. Many insurance companies charge around 4.5% to 5%, maybe 5.5% for their loans. And like the interest you pay to 401k, the interest you pay on the benefits, it benefits you for both the 401k and the life insurance policy. However, unlike a 401k plan, your cash value life insurance policy will continue growing as though you never touched a dime, and you don't have to liquidate any assets to get money.
Alan, are there any fees when you borrow from your 401k?
There's always fees for everything, Neil. The typical 401 administration fee is $75 loan origination fee, plus an annual loan maintenance fee of $25. Now, this raises your effective borrowing cost. There are no fees for borrowing from your cash value life insurance policy.
Alan, what happens if you can't pay the loan back?
About 8% of active workers default on their 401k loans, which rises to 65% of people who leave their jobs. Most 401k plans require a borrower who leaves their job to pay with an outstanding loan balance to pay it back, and usually that's within 30 to 60 days. And if you default, you must pay income tax on the remaining balance plus a fee if you're 10% if you're younger than 59 and a half.
Alan, is there taxation on interest payments from your 401k?
Absolutely. You're taxed twice. You're taxed on the interest and you're taxed on when you take the money out. You're not taxed on anything cash value life insurance because of IRS codes 7702 and 70E.
Alan, overall, what are the benefits of cash value life insurance?
Well, the benefits are many. There's no financial vehicle. In fact, cash value life insurance is an asset in its own class. Many people try to tell me, well, I've heard that life insurance is a bad investment. Well, first off, it's not an investment. It's an asset class all of its own. There's no other financial product that will give you money that's tax-free and gives all these benefits. You can have it as tax deduction if it's set up certain ways in a defined benefit plan, but it grows tax deferred. Your distributions are tax-free. It does not affect the taxation of Social Security or the means testing for Medicare Part B, which will be in the thousands of dollars per year. You're protected from lawsuits, liens, and judgments. You have, for pennies on the dollar, you have tax-free money for long-term care. And 70% of the people in America are going to need long-term care at some point in their life. And right now, that's between $50,000 to $200,000 a year. The other thing, you become your own bank. You borrow from yourself, pay yourself back, compounding interest for you and not the financial institutions, and eliminating the effective interest costs that you're paying on the money that you borrow. It avoids probate. Probate is absolutely huge. The government takes control of your assets. Your beneficiaries will be left with a lot less than what they would be. Also, it's the greatest wealth transfer vehicle available today, bar none. Another thing, it's the greatest college funding vehicle available, with many benefits that a 529 plan does not have, because you have, well, number one, there's no market risk. And the benefits of cash value life insurance when it comes to retirement, understand this. You take your money out tax-free. It does not affect the taxation of Social Security or the means testing Medicare Part B, which will be in the thousands of dollars per year, but it eliminates the risk in retirement. The number one risk in retirement is running out of money before you run out of life. It eliminates longevity risk. It eliminates or gives you a tax-free method to pay long-term care. It eliminates sequence of returns risk because we're not tied to the market. Many people don't know what that is. And if their financial advisor doesn't know what it is or won't tell them, have them call me because I will, and I may be their new advisor after I tell them about sequence returns risk with the stock market. But the benefits and the mitigation or elimination of risk in retirement are many when it comes to cash value life insurance. But the biggest thing is protection of your family and protection of your assets. And that's my professional and personal goal.
All right. You can email you at strategicwealth, the number 0 @gmail.com, or call you at 910-551-1046, or go to strategicwealthstrategies.com. Appreciate it, Alan.
You bet.
All right. That was Strategic Wealth Strategies podcast, guys. Take care.